All right, let's look at Monday, May 18th. Obviously, this is a new weekly power of three, so we're heading inside. This is going to be the third full week of May. Okay, so far, what did price do? It opened, expanded, okay, immediate rebouncement a day after the open, and from there, right, created a breakaway gap inside of the range, two breakaway gaps actually, okay, which is one weekly fair value gap, and then has found here a consolidation, right, ended up expanding, and currently is rejecting premium. Okay, so this will be interesting for the weekly profile. We'll look at different profiles that could happen based on different key levels. If we look at the weekly chart, right, closest weekly level here, we have a weekly BISI, okay? If price is really bullish this week, very likely we'll trade to it on Monday or Tuesday and create the low of week. Okay, to me, this is still the best case scenario. Look, I'm looking at this weekly chart. It's hard for me to assume that price will want to reverse. I think that at the worst case, may want to come back to the mitigation block here on the monthly chart. Why would it want to do that? Well, because there was a long phase of accumulation, right? And say you're an institution at these levels, right? And you got short here. Well, you never really got a fair chance to get out, right? Or to mitigate part of your losses because price just rallied through this range. Also, right, inside of this range, what do we have? We have a lot of chasers. Okay, so the market is overall still bullish, right? We're yearly profile, in my opinion, remains a classic yearly profile, a classic buy profile, sorry, on the yearly. But right, it makes sense that price will want to see some kind of reaccumulation inside of the range. Okay, on a weekly level perspective, right? I'm talking about on the lower time frames. Obviously, this would look like a reversal. There's confluence of standard deviation. Okay, not only the current one that we have, okay, for the current yearly profile, but also from last year's profile. I can see, in fact, the standard deviations that we're currently trading off come from 1 to 1.5, right, from last year. Market expands into negative two standard deviation of the 2025 power of 3, and right, the first stage of reaccumulation for the market maker buy model from the current yearly low. Right, like when I look at this chart, what I ask myself is, will price simply want to retrace inside the fair value gap to expand, or will it need to come back inside of the range and offer right, and come back to the mitigation block, reaccumulate order at these levels, take out the chasers, give a fair chance for shorts to get out, and then from these levels continue trading higher. So I think that the weekly fair value gap here will be definitely a key, a level that you want to have marked down on your chart. It should be a key level this week. There should be good daily profiles forming around these quadrants. Right? I'm not saying all the days, obviously, but you know, since Monday here is trading at these levels, right? Already Monday could be a good candidate for the daily profile or a session profile to provide a trading opportunity around, right? So say a lower time frame fair value gap through the quadrant of the weekly fair value gap. If not, also I think that Tuesday or Wednesday at most. I don't believe that Thursday or Friday, right? Because if the week is bullish, okay, it's going to form a low on Monday or Tuesday, and then Thursday or Friday will be already trading in premium. So I would say keep this level on your chart. Right, currently the market is showing some kind of sign of lower time frame rejection, so it's going to want to draw back inside discount, right? So what's the closest discount array? Well, it's a weekly fair value gap. On the 4 hour, okay, we can look at a 3-week look back. Okay, so the market consolidated, expanded. Right here, what can you see? You can see this to me looks like, right, some kind of inverse market maker sell model, right? You have the original accumulation, price breaks out, revisits the accumulation, okay, so low risk buy. Price then expands, reaccumulates, first stage of accumulation, continues, second stage of accumulation, expands, right, and now is finding a reversal. And what the profile of this curve is showing us is that, right, the accumulation here was done, well, not the accumulation, sorry, but price inside of this range traded the most amount of contracts in premium, not in discount, right, and has not continued to expand higher from the open, right? In fact, is currently displacing lower on the lower time frames. So we can see that there's signs of rejections here, and in fact, price left a lot of bearish PDRs inside of this range, okay, such as a bearish order block, right? We have many order blocks inside of the range, breakaway fair value gap retrace inside of, right? You have range, you currently have a range here of a potential bearish breaker here. I mean, price is currently already trading below 50% of it. If it's going to find a strong close, I think that this would already become a bearish breaker. So the highs are pretty high resistance right now, right? Premium is high resistance, discount is low resistance, okay? So very likely price will obviously come back and say discount. Well, not obviously, but I mean, for all that matters, reverses right now, right? Everything's possible, but I think, right, if it were to come back inside of this range, okay? Obviously, we have at these levels the weekly fair value gap. Now you can see price didn't spend much time at these levels. Okay, and now that it's finding a rejection, it doesn't mean because, right, it didn't spend much time that price needs to come back to it. But currently it's relevant because the market has created bearish PDRs inside of the range. Right, so this is the closest discount array inside of the range. If we put some, we can put some standard deviations. This can be an option. Okay, this can be an option even in case of a bullish week. Say if price is really bullish, creates a divergence at previous week's low on Monday, okay, and expands. That's a possibility. If not, right, if this doesn't happen, right, if we don't get that divergence, remember that there's still an important order block at these levels, right? Right, so I think that these levels are still very relevant on the 4 hour. Right, you can see they align with standard deviations. And in case this level is inverted, right, it can become an opportunity to, okay, all depending on the weekly profile, obviously. If price retraces into it, right, it will use it as an inversion array. But if the profile of week is bullish, okay, say, right, Wednesday trades here and rejects, well then Thursday can very likely start to reclaim these levels or, okay, consolidate around them. Same goes for this series of down close candles. And if it respects it, well, it's going to create a turtle soup, okay, respect the order block and trade higher from there. On a 3-day look back, I mean, I think it's pretty, well, price is already trading below the sell side pool, so it's seeking a higher time frame target. Right, it's already trading at the open below the 3-day look back, okay? And so far is not showing signs that it quickly wants to reverse, sorry. So clearly it's seeking a higher time frame, right, discount. It's seeking higher time frame discount. And we identified that through the weekly fair value gap, okay, and the range of the 4 hour order block. And the standard deviations here actually of the 4 hour, they align with, they align with the open of Wednesday, May 6th, okay, which had no, right, it gapped up and rallied, okay, so clear inefficiency in the range here. Right, if you look at the profile of this curve, right, you can see this is where price spent the less amount of time in the range. So, you know, I think it's pretty likely that it's going to want to come back into these levels, which aligns with the levels of the weekly fair value gap. Right, so if you're bullish from there, okay, you can start looking for reversals higher if the profile of week, right, aligns with the narrative. Right, so on the 3-day look back, we can look at the curve of the 3-day look back, okay, which is pretty interesting because it was a consolidation phase at these levels, okay, and now at the open, right, price is breaking out of the range, right? So since we are trading inside discount, okay, what's our dealing range? What shakeout does the market come from? Well, at these levels here, the market, okay, this was in the PM session, the market trades above the London highs, the S&P 500 doesn't, and from there does what? Creates a change in state of delivery, right? So at these levels, okay, this here is a very important level because this is the high of the dealing range that we're currently trading in, right? This was the last shakeout that brought us to range low. So standard deviations can also be put on this. I can see that so far there could be an opportunity for something like this, right? And then say creates a fair value gap at these levels, right? And then New York trades at these levels, okay? Very likely can continue trading lower, but whatever, that's beside the point. But these standard deviations are valid also, right? Because it's the last shakeout from the current dealing range. So this may be more for a lower time frame perspective, okay, such as a session profile, a 4-hour profile, right? If your price is trading at these levels and you're still bearish and it retraces, okay, this can be an opportunity for you to look for a session trade. If you look at the previous day's profile, right, same level, okay, so very important order block inside of this range. This is the current hourly dealing range that we come from, the last shakeout in the range. So very likely the market will want to, right, and you can see, look how it creates a fair value gap right through 50% of the dealing range that we're currently in, right? Range low, range high. So fair value gap right through 50%, okay, of this level. So I think very likely the market keeps doing this, okay, if it even retraces, because it could simply break out. Okay, so premium array of importance, this level will probably stay relevant the whole week. On the 4-hour chart is this fair value gap. Sorry, it's not a fair value gap, but an order block, I mean. Now, if price ends up being bullish this week, okay, once it trades above here, it's going to claim its level to trade higher. If for whatever reason, okay, starts revisiting it early inside of the week, then very likely price will start trading it lower to discount, in my opinion, because, well, because of time, right? Because of the daily, sorry, the weekly open, right, which is located at these levels. So if it trades back inside these levels early in the week and fails to displace it, then I think we can see something like either a classic sell weekly profile, okay, or some kind of swing to Z, right? Because then at these levels, right, price has high resistance in here, okay? So it can be like, it is a possibility that price can consolidate around these levels. But anyways, that stuff we'll see throughout the week. Meanwhile, okay, this order block, if ever it's revisited, very important to have its quadrants on. Around the hourly, it's these sets of order block. This has a fair value gap through it. It has a bearish order block. So very important premium array, and also a level that you can probably keep all week again. And discount arrays, we looked at the weekly fair value gap. I think that this should be, well, I think it's very likely that it will get traded too. Okay, so very important to see how the quadrants are traded to gauge order flow. So very important discount array, and another discount array of interest, well, was this order block, because clearly price came back to right, it showed that this is a valid order block inside of the range because price respected 50% of it and expanded from it. So if ever it were to inverse this level, right, or have a turtle soup, then the quadrants will be relevant. Okay, so everything was covered, so let's see what tomorrow gives.